Okay, so this is home away. Is anybody familiar with this stock home away? This is basically where if you want to go on vacation, but you don't want to stay in a hotel or a motel, you could rent somebody's place. Sort of like an Uber for vacations. The Uber isn't super popular around here, but Uber is sort of like you can become a taxi driver through the Uber app and just use your own car and drive people around for money. Vacation rentals. No, it's basically say you have an apartment in the city that you're not using because you're dorming out here, and then you want to rent it out for vacationers at anyone for a day, 2 days, a week, 2 weeks, a month. You just put it up on this home away site, and then people log in, and then they contact you and rent it from you. Oh, I thought you meant like, when you say B&B, I think of bed and breakfast, where those generally you have to make breakfast for the people. So when you say Airbnb, I imagine that they could stay at your place and you make breakfast for them. All right. So anyway, this obviously is making money. They get a piece of all the transactions, I guess, or somehow they make money when you list there. And if you look at it, it's generally for some places you can get a much better space to vacation in than a cramped hotel room, which is really just 2 beds, a TV, and a bathroom. So if you have more people or just want to be or have a little bit more space, or perhaps save some money. Okay, so we talked about resistance, breakouts, supports, moving averages, and technical analysis last class. So here, the green line is the 100-day, and the red line is the 50-day. So we don't really want to own the stock when the stock is between the 50 and 100-day. So this is sort of a gray area. And we had some interesting turnaround here where we had multiple sell signs of the stock going below its moving averages, only to have the stock turn around and actually break the support of the green line, which is the 100-day, and then the red line, which is the 50-day. But in technical analysis, those buy signals didn't last long. You really only moved up a small fraction before we had the stock trading below, breaking out of the support of the 2 moving averages, and then quickly reversing that. So again, every time it breaks the resistance of the 50-day moving average, it says, so if you could see this on the graph, which the graph is, we confirmed last time, real time. So right here, as soon as it breaks above the 50-day moving average, you can see that every time it broke above the 50-day moving average, it moved higher, significantly higher. So if you kind of watch the technical chart, and then you want to buy whenever it breaks above the 50-day moving average, which is like a resistance. It's hard for it to penetrate that. Once it does penetrate that, the momentum usually keeps spiking it up. But the trick is to sell it before it starts to veer down. So you could use these technical charts, and when you see the momentum turn lower on the on-balance volume, or the days it moves up, which is looking at days it moves up, the volume compared to the volume the days it moves down. You use some of these more sensitive charts to kind of pinpoint the change in the direction. Then hopefully you could sell it at one of these peaks. Because again, it went below, and then you could do the opposite. As soon as it penetrates the 50-day on the downward side, you could sell short. And then, because generally, if you see here, every time it, see how it's bouncing off the 50-day? That's the support. When it actually breaks below the 50-day, it tends to go much lower. So then you can also see when it breaks that support at the 50-day, it's a good short sell point because it's going to continue to go lower. So if you look at all these different technical areas where you could have bought and sold and made money, so right here is a classic technical pinch where we have in one day, or maybe a 2-day time frame, we had the 50-day moving average cross over the 100. Which is very bad technical sign. And then we had the stock price cross below the 50 and 100 day. Actually, first the stock price went below the 50 and 100 day, and then the 50 day crossed over the 100 day, all within this small time frame. That's a huge sell sign. It's a triple sell. And you can see how much the stock went down after that occurred. So at this point, the stock's been bouncing up somewhat, but in technical terms, you wouldn't buy the stock again until it went above the 50-day moving average. So you would be in a holding period. But there are plenty of opportunities to buy or sell short during this 6 months time frame on this stock using technical analysis. So you could use the broader picture of the moving averages, 50, 100 day, to get an idea of where the support and the resistance are and the breakouts are occurring. Make your trades, and then you could use some of the more detailed volume charts to get an idea of when the momentum is going to change in the other direction. So down here, this is seemingly the bottom down here, and it's starting to move up again. If the momentum charts we talked about start to verify that this is in the momentum upwards, maybe now's the time. Because maybe you could catch it on one of these dips like it has down here, and it should spring back up, another 10, 15%. And that's the other thing. If you look at these charts, certain stocks have different ways typically of reacting, because there's a typical set of people who are buying and selling the stock. And the majority of those people say the same people that buy and sell it. So they have repeated behaviors that you could witness. Just like, has anybody ever worked in a retail store? Okay, we have one person that nobody else worked. What retail store did you work in? What was that? Okay, a clothing store. Did anybody ever work in like a convenience store or a supermarket? Okay, that's a little bit better of an example, because if it's a convenience store, you start to see the same people coming in. And you can almost guess what they're going to buy. This same guy comes in and he buys a case of beer and a pack of cigarettes. Yeah. And so that is a predictable pattern. So technical analysis is just trying to see, if that guy walked in and there was someone new working there and you said, I bet this guy buys, these two items, you would be right, because you're basically trying to predict past behavior and future behavior. But if you look in this chart, you'll see that stock typically does have these very severe, very distinct V's in it. You see these V's, which are, once the stock tends to pick up from the bottom, it tends to V back up quickly. It doesn't sort of hover or gyrate at the lower levels. This tends to pick up fast on the V. So you see how it forms these V's in the chart? And in this chart, we see a lot of these V's occurring on the bottom end. So that would basically tell me here that this is probably trying to get back up and form that V. So pattern-wise, this chart would be sort of a triple V, and as a pattern. And I would want to go and buy it back on that upper side of the V. So in your virtual stock market, you may want to actually purchase this, because it does look like it should complete that V and go up to the $34 mark, or at least the $33 mark. I wouldn't suggest doing it with any real money, but we could kind of play with the virtual stock market and see if that actually occurs. All right. There's this other stock. I used to dabble with this stock a little bit, but it got kind of, I had it for all the right reasons at $45, but then I got nervous and sold it at 50. Figured it's the best I could do, and now it's 100, which is, again, I should have just never even looked at it and just not traded. Okay, what does this chart tell you happens when you just look at this? This particular area here, when you see a straight line in a chart like that, that has nothing to do with technical analysis or any patterns. That has to be some sort of blowout news or earnings came out. And in that one day, the stock price rocketed up a huge amount from $70 to $100 in that one day. And that was basically, you see that this little area here, this is volume. So when you have a stock that moves higher on very high volume, that's indication that some very good piece of news came out. And I'm pretty sure that was an earnings report. And with that piece of news, we reversed this trend of this negative trend here where we had the red line is the 50-day. The 50-day crossed over the 100, and the stock price went below both of them. And then when it tried to test the support, it couldn't break through. It had a hard time breaking through support levels. The 50 and 100 day are both support resistance levels, I should say. Support is when the stock is above them. If the stock's below them, they're resistance levels. So it couldn't really penetrate these resistance levels, and we see the stock taper off quite a bit until, and this could have been your first buy signal. That's why some of these technical signals, you want to, depending on the stock, like this stock I would usually buy in the first technical signal. When it went above the 50-day moving average, that could have been your technical signal to buy into it. Because you know what happens is a lot of people know about these earnings and this inside information gets around. So the stock starts to trending for no reason. You can't, at this point, you really have no reason why it's doing this. And that's because there are people in the know and information is getting around. It's not public yet. So that's why technically sometimes it's good to get in that first signal, because before the second signal happens, this is the second signal when it goes above the 100, and the third signal when the 50 crosses over the 100 is, you know, triple buy signals. So right now it's hovering around the $100 mark though. So even though it has a triple buy signal, the thing that I would worry about is that it overreacted to the news. And that you see this big distance between the 50 and 100 day, this huge chasm between them. That's usually a warning sign that, you know, the stock should gravitate a little bit more closely to the moving averages. It's sort of like when you took 1, 2, or 3 standard deviations. And actually, in technical analysis, they have these Bollinger Bands that are, I believe, at least 1 or 2 standard deviations. Okay, it's actually 2 standard deviations. It says so right there. So they can put these Bollinger Bands in, and these are statistical probabilities of where the stock could go based on 2 standard deviations, which is something like 96% accurate statistically. So statistics does become incorporated into a lot of technical analysis, and here we could see a very narrow Bollinger Bands where they say technically the stock should trade in this area. And you'll see that most of the stock trading history, it is trading in that area, except for this news release that shot it way up beyond statistically improbable results. And now we have this this chart formation of basically this O formation, where the statistics on this now are saying that really they're not sure, because of the huge volatility, anything can happen with the stock statistically now. So but then you start to see it narrow up here. So it looks to me like this stock is probably going to level off at this particular point for a while, until the next piece of news is released. So that's key. So a few days or a week before the next piece of news comes out, the next earnings release, technically it's a very sensitive time technically to look at the stock price movement, because if it starts to tick up, maybe people who are in the know realize what's going to happen. So if a week before earnings, and as earnings approaches, the stock keeps going upwards, technically, you know, sometimes that might be a buy into the inside information. And if it starts to go down, that could be an indication that the news isn't going to be so rosy. So sometimes before the earnings release, that's why if there's a surprise earnings, which surprises most of the way people were thinking, the stock reacts so violently. So this was really a surprise earnings for most people, and they really piled into the stock. So a very unusual stock chart. And I think you know, very few people buy in the first technical signal. All right. Does anybody have a symbol they want me to look up? What was that? Under Armour. This is a consistently strong growth company. See, what's nice now, I am starting to appreciate the new Yahoo charts because they actually do leave in place whatever you looked at last on the technical analysis. Okay. So this is 6 months of Under Armour. We see here, right in this area over here, when the 50-day, I'm always curious. I always start where I always like to start where a good cross. So we have the 50-day moving above the 100-day over here, and back over here we have the stock. This would be really your first two buy indications. Technically, is the stock. This blue line is the stock price. It's moving above the 50 and 100-day together. So you get two technical buy signs. And that would say, okay, buy the stock. Now, if you bought the stock here, you had a nice run up. And finally, when the 50-day crossed over the 100-day, that's the third buy signal. So some technical people, they break it up in tranches. And they'll say, I'm going to buy 1,000 shares in the first technical signal. That's positive. 1,000 on the second, and 1,000 on the third. So by the third technical signal here, you can see how much the stock went up. The price went up greatly. And then a lot of these people who buy in on those slices, they'll actually sell at the first negative signal, which would be passing when it broke the support of the 50-day over here. They'd sell all 3,000 shares. Because typically once the stock breaks the 50-day, it's very common it'll break past the 100-day, and we have two negative sell signs here, which they may actually, the first technical indicator, when it breaks below the 50, you sell all your long position. Then when it breaks below the 100, now you start to open up a short position. Unfortunately, though, that wouldn't have been a good thing because the stock never had the triple, and the 50 didn't cross over the 100. Instead, the stock turned around, and the stock crossed over the 100 and back over the 50. So now, Under Armour in this position right here above the 100 and the 50 is a technically strong stock that say momentum should move higher on it and you should purchase. But you can see how much trading this would be if you started trading technically, and you're making a lot of moves in 1 year. You could trade a stock back and forth quite a bit, and that's what they're not day traders, but technical traders would trade a stock probably once a month or once every couple of months. And they make a lot more money than a day trader. A technical trader who's patient and waits for the signs to line up would typically make a lot more money because the momentum trends usually carry forward. Now picture someone who's tracked this stock for 5 years. His stock suddenly becomes like your boyfriend or girlfriend. You check in with them a couple times a day. You have a good idea where they're going, where they're going to be, where they've been. You're just very familiar with them. And you could probably predict their whole week. You could say, on Monday they'll wake up and probably eat this, and then go to lunch here, and then come back at this time, and then go to the gym at this time. And you could probably predict a lot of their movements for a whole week because you're so familiar with them. That's how it becomes with certain technical stocks. If you train in technical analysis and you follow these stocks for long periods of time, then suddenly you get to know them very intimately, and you can make better and better predictions. If you try to predict off of just really studying the chart for 10 minutes, you're going to have less of a success rate than a chart you've invested hours in over a long period of time. Because, like I said, stocks usually develop a cult of people who trade them, who trade in a similar pattern. So their predictable trading behaviors is sort of influenced in the movement prices of the stock. Now, the only thing that does worry me here is that on the Bollinger Band, it's reached the top part of 2 standard deviations on the Bollinger Band here. So that would, that's one negative technical indicator. Anytime it touches the top Bollinger Band, and you can see here, when it touches the top Bollinger Band, it wants to gravitate towards the bottom Bollinger Band. So, and some people trade on the Bollinger Bands. As soon as it sort of touches the top, or, as soon as it's sort of at that top level and starts the momentum away from the top band, they will want to buy when it's touching the bottom band, and then sell when it's touching the top band. So here you would buy as it's actually back here. You would probably buy and then sell and then buy, sell, and actually doesn't actually touch the bottom again to here. Actually talks to the top again here. So right now you could have bought here at the bottom and sold here at the top. So some people will use the statistical 2 standard deviations in the Bollinger Bands to kind of denote. In some stocks, this works a lot better than others. All right. So I could look at one more stock if anybody had. I know Zynga. I used to play Farmville, but only when it was cool. Like Candy Crush 6 months ago. When there's a period when these games are cool and it's okay to play, but then at some point it crosses over and it's like you don't want to be caught dead playing them. Okay, so this is we all know they make games. And the games they make are sort of like you play for free, but then when it gets frustrating, you have to pay to advance, So most of you are probably like me. As soon as you got to that 30th level on Candyland Crush where the frosting starts coming in and the licorice, you just gave up because you're not going to be paying hard on money to earn special things to advance in it. So you're just done with that game. And other people, though, I talk to, they're like level 90 or 100, and they're buying those special things. They're just so addicted, they just... So that's their sort of strategy to make money on this. Now, let's go way back here, and we see the 50-day. 50-day crosses over the 100-day, and the stock price before that had gone below it too. And it's been a sort of a downward slide for the stock. Has been trading below its moving averages for quite some period, and then we had a little bit of hope here, where the stock was routinely breaking above the 50-day. And when you see a lot of breaks above the 50-day, it sort of weakens that resistance level, which is easier and easier for the stock to do it. Unfortunately, it wasn't able to break above the 100-day test. And it touched the 100-day and then went below the 50. So here would be, if it can't break through the 100, that's a sell signal. And if it goes back below 50, another sell signal. But now we had this reversal where it sort of went above the 50 and is touching the 100. So this, you would want to watch this stock chart over the next couple of days to see if this actually goes above the 100. Because if this does pop above the 100, you probably do want to buy it on technical terms. And again, when I say buy, I'm only talking about your virtual stock exchange. To learn, I don't advise anybody to do this with their real money. Now, if it touches the 50 and comes back down, you'd probably want to sell it short because it's probably going to head much lower. It's going to disappoint people because people get disappointed. They get excited and they're waiting for it to break the 100. And if it won't do it, then they just want to either sell their stock or short it. And that's how sometimes this self-fulfilling prophecy where they're watching the charts and reacting to what's happening in the chart actually makes the chart go in the way they're anticipating in some cases. So this is, and this all is, a lot of this is behind the news of the company affects it too. So when the company comes out like, gee, we can't really break away from Facebook, and Facebook is, moving in and onto our territory, and we can't, our model isn't expanding, and we're running out of hit games. And Candyland Crush stole our thunder. I think it was like King is the group that made that, and they went public, and their stock went up for a while there. And actually, let's look at that. Is it King did? Yeah, so this is the one that makes Candyland crush. Have you seen the commercial with the old lady crushing the candy on the counter? 3 in a row. Delicious. All right. Wow, what a mess. Okay. So the stock started, so the stock is a relatively new stock, and it started trading on the success of that one video game initially, Candyland Crush. And you could see that the stock price, when the 50 days started trading, it was trading above the 50-day, testing the support of the 50-day a few times. And here's the troubling part. It breaks below the 50-day, and then which you could almost kind of see the 100-day forming here. It would have just sort of been sort of like this, and it breaks below what would have been probably maybe the 90-day moving average would be here, but the 100 picks up here, but it's actually below both of them at this point. So this would have been a sell, and you see this high volume here must have been an earnings disappointment, and you see how much the stock reacted to the earnings disappointment. And typically momentum, when you have an earnings disappointment, the stock usually continues to slide after that, because you get the bad news, you get a big blow up in the stock, but then there's really nothing to look forward to but more bad news, and usually the first sign of bad news brings more bad news, and the stock usually slides lower. But over here, which is conveniently 3 months later, which is another earnings report, we see that there must have been the news must have kind of bottomed out, and that's why there's a lot of trading and volatility before and after the earnings report. So if a stock does badly in an earnings report, there'll probably be a 3 month period of time where it's going to gravitate lower. And the next earnings report is going to dictate where the directional change of the stock is in the next earnings report. And that's why we have that. We saw a few weeks ago that you have that increased volatility right before earnings, where people are jumping in and jumping out and trying to make their bets or trying to protect themselves because they don't know what's going to happen. But here would have been a good point to buy into the stock, because it's must have been good earnings. You see how it actually moves up before the earnings release. And you can tell by the volume. And that's why these volume technical reports are good, because you see we have a rising volume and a rising stock price and no news. That's a sign that earnings are probably going to be good. There's some people know the information gets around. Then when earnings actually comes out, the volume really spikes because now it's definite. And you can see the stock went above the 50-day, and it's heading towards the 100-day. So here, technically, this would be a good stock to buy because it already has one buy. If it goes above the 100, then that would be a second buy technical indicator to buy into it. And then if this 50 crosses over the 100, that'd be your third buy sign. So you could do buy 1,000 shares here, buy 1,000 shares here, and buy 1,000 shares when they cross over. One thing that I would never recommend anybody buying the stock, no matter how convincing the technicals are, because I just don't have faith in the underlying business. Because the underlying business is sort of like Zynga, what we just looked at, which is they have these app-related games, either on Facebook or downloadable apps, where people have to. There's a particular name they have for these games. They're like, I heard it yesterday. It's sort of like, it's not free to play, but they made a creative name. It's sort of like a mashup of how these, you pay in the end of these games. Anyway, so these are just some of the technical indicators. And if you look on Yahoo Finance, they do have the money flow indicator. And that's actually not this one. Oh, the relative strength is another one I want to talk about. I don't want to talk about this one. Money flow would be another good indicator, but the relative strength index is something that I do want to talk about. And it has its own separate chart. Okay, so this RSI, called the relative strength indicator, is another technical statistic. And what this measures, there's sort of a bandwidth where it looks at, again, overpurchased and oversold. So when it reaches the top peak, it said that the stock is overpurchased. So this peak here would say the stock is overpurchased, sort of like an 80-20 rule on this. And you can see how it correlates to a peak in the chart. So whenever it peaks above or touches 80, you can see here, this is the 80 line. It's not shaded. It's shaded between 30 and 70. But if it ever touches 80, technically you should sell it. When it comes back here and touches 20, you should purchase it. And right here at the bottom, it touched 20 here, and there's a nice run up, and now it's actually technically at 69. So it looks, by the RSI, statistically, the relative strength isn't going to go much higher than 80, although it could. It looks like this stock most likely will touch 80 again before it goes back down. So there could be a temporary period here where you could pick up a dollar or two on this stock as it's going at the end of this momentum trail, which we have the 69 to 80. So probably crest at 80 before it heads back down. And the stock will most likely at least try and test the 100-day. So some technicals would buy this just for that $1 gain they could most probably get with it. But the relative strength index, again, is measuring how oversold or overpurchased the stock is. So here at the top, it's technically saying that the stock is incredibly overpurchased and generally indicates a turnaround. And down here, the stock is oversold. Sometimes you could be waiting a while, like here, it touched the 20, and it was a very gradual, long while before it reached the 80. But there are a lot of stocks and a lot of people who will just systematically buy stocks when it touches the 20 and wait till it reaches 80 and sell it. And you can almost set that up like a computerized trading program. You know, find 100 stocks that have a good track record of this occurring frequently, 2 or 3 times a year, and then buying and selling based on when it reaches those. Something like a hedge fund could set something up like that. And this is a technical indicator, which could be another piece of evidence that you could utilize. You know, say we're looking at like Netflix. Does anybody hear of this company, Netflix? Yeah, they do video streaming. I think it's going to be a big thing. And the time frame, you could use 6 months or a year or 3 months. It's typically some of the time frames. And we could see, okay, see here we're along the top of the RSI. And we have actually right back here is when you should have purchased the stock. Goes above the 50, then above the 100, and the 50 goes above the 100. So you have this track of, think about like 350 or 360 here up to like 460. So 100 point. If you would have moved on this first technical indicator, you could have made a 100-point gain up to the top. That's pretty significant. Now, as the stock goes closer and here crosses over the 50-day, that would have been, it really kind of didn't, it really broke that support level. But then tested it. And then but statistically here it's close to the Bollinger Band, so it's a gray area. But there's some sort of bad news here. You can tell from the high of negative volume. The pink indicates negative volume as a majority. The pink indicates a day where it's down on the volume versus green where it's up day on the volume. But now here, we finally clearly passed the 50-day, it could have been another short buy window until we get into this mess over here, where it, again, crosses over the 50, trades between, a lot of times the stock can bounce between the 100 and 50. So the 50 is on top and the 100 is on the bottom. We really don't do anything. It's a holding pattern. We wait to see where the breakout is going to happen. And here, it looked like it was going to break out above, but never quite made it. More than a day or two to break out above the 50-day. And eventually, as soon as it broke below the 100 here, so you had a few days before the real bad news hit. So this is what I'm saying. You see how the volume's picking up? You see that volume is starting to pick up. That's basically, okay, something's happening, volume's picking up, an interesting period's about to happen, and we get this technical indicator like a week before when it breaks below the 100, and then anything time it breaks below a support and can't break above it, it tests it but can't break through the resistance like it did here on the 100, that's saying hold it. And look what happened. The news came out, and you could have made it, on a short position, a decent amount of money. And then eventually here we have the 50 going over the 100. So Netflix is in a very sell position right now because you have the 150 and stock price, which is sort of it's upside down. So I wouldn't want to own or hold Netflix right now because technically it's just 3 sell signs, and it should go lower. But it's not going to stay there forever. Eventually it's going to go above that 50-day again. And when it goes above that 50-day, that would be a point for you to purchase, technically, the first indicator. Because if it ever does go above again the 50, breaks to the 50 support, some sort of good news is coming out. And it's reversing the trend, and the momentum's now going to be higher. And it just requires patience to hold on. And then technically here, see how this bottom point here kind of correlates to the touching the 20 on the RSI down here? So it would have indicated, okay, it's oversold, purchase it at this bottom. And you see how it really hasn't moved up much? So that's actually an indicator where RSI is saying that it's not over-purchased yet. So there could be this slow continual drift to the 50 days. So if you wanted to take a risk, you could sort of buy it on the RSI information saying that the stock is still technically oversold. Which means it's basically saying most of the people who are in the know of the stock are holding their money back and haven't bought back into the stock yet. So there's all this money on the sidelines. So when the RSI is close to 20, most of the traders have their money on the sideline. When the RSI is close to 80, most of that money is already invested in the stock. So you don't get the actual push up of that money. So there's a whole basket of money that these technical traders and mutual fund traders and all sorts of people just kind of push in and out of the stock. So when it looks like the stock's going to go lower, they start all pulling their money out to capitalize on it, maybe sell short. And that's when it becomes oversold, and eventually that has to reverse because they have to reverse their short positions. And if the stock actually does produce good news, all that money is going to come back in and push the RSI back up to 80 and push the stock market back, the stock price back up. And this is how technical traders trade. And this is why a lot of people with closed minds will say, well, this just sounds like nonsense. Like that one guy who got up and left the class a few minutes ago, he probably just had enough. This is as bad as astrology. I'm not going to sit here and listen to this crap anymore. I'm out of here. But all I can tell you is it makes me a lot of money, and it makes plenty of people. It's been around for over 100 years. It was the first trading analysis system designed, and it's what all of the news shows and stock shows talk about is technical analysis. So if you watch these news shows, they talk about new highs. They talk about the S&P reaching the support level or resistance level. And there are tons. So if you are interested in this, I would never suggest you start using this with your real money right now because you are just too far of a novice. But if you are interested in this, you should check out. There are plenty of books written on the subject. The whole book's just on technical analysis. You should follow up, educate yourself, and then test it in a virtual account first to see if you actually can, do well with it before you actually trade with your own real money. But this is how a good deal of traders trade and how they make money, is using technical. Now, I use both. I believe in the fundamentals. I believe in the traditional approach of is the financial statement sound, is the management strategy sound, and are the products desirable, beneficial, and are they selling? Is something consumer wants? So if that's like all in there, like if you look at Netflix, it's clearly a well-managed company and clearly has a product people are buying, So that's all there. So what's really left is really just a technical piece to know when to buy and sell the stock. But I have to tell you, I rarely deploy technical analysis on a daily basis because it's a lot to look at. I don't have that much time to keep track of everything. But if there's a stock that I want, that, you know, I can tell you a stock right now I do want, Chipotle Mexican Grill, I'd like to have into my portfolio. But it's just too expensive. So I'm technically waiting, watching every once in a while for technical opening that would say, okay, this is the time, once in a lifetime opportunity will develop, and that's when you should buy the stock. So I'm patiently waiting like a cat in front of a mouse hole for that magical time where they become a little disfavored or undervalued for no good reason to get in there and technically get a good strong position. Until then, I'm willing to wait. Yes?